Hi there, a very good morning and good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all slightly late because I was analyzing the situation that is happening in Europe at the moment and the way the markets have fallen. Uh, so we'll discuss about everything. Good afternoon to all of you in India. We'll discuss about the situation and we'll also talk about how the markets may behave going forward. It has been a sharp fall and we have broken the 200 DMA. So we'll discuss about the markets as well. So we get things going by talking about a few things that I already mentioned with my Patreon members, that I already mentioned with my YouTube members, with my WhatsApp members, and they knew about it about 4 or 5 days back. I think it was 3 or 4 days back when I discussed about selling most of my positions. So normally I don't talk about it on YouTube comprehensively, but today I'm going to talk about the reasons which I mentioned at that point of time when I sold my positions at 17,200 to 50. Not that I'm trying to pat my back and say that okay, I got that right and this and that, but the way the markets were behaving, Russia tensions were not the reasons why I sold, or not the only reasons why I sold 50-60% of my position. There were a number of reasons for that. We'll discuss about them, and probably those who watch my videos later on or who are watching me live might think that I'm trying to say this out of the box and just like that. So kindly, those members on Patreon would you can say back me up by stating here as to what I mentioned about say few days back, and those on YouTube also who all are the members, and we discussed about the fact that the markets are looking weak and there are a number of factors on which I was scared. I'll talk about those factors again here. Those who are on Patreon would have got those podcasts, 6 7 podcasts that I put up straight away, and also YouTube members, and would have saved a lot of money by acting upon it, I hope. Although I could not get out of all positions and I am losing on a couple of them and losing big time, as are others, and I feel aggrieved for that. But whatever is happening in Europe at the moment, especially in Ukraine and all, we have to be concerned more about that rather than the markets. And I'm very surprised, to say the least, with the way the anchors across television channels are behaving with respect to the market, that they are trying to find out about a bottom and where to buy, what to do. Whereas there is a huge political uprising that is taking place in Europe. Uh, I don't think, personally speaking, that this is going to subside very soon. I believe that going forward, we may see a situation where this may escalate. This may escalate towards other countries, say in Europe. And if US joins in, although they have not mentioned about it yet, probably in the evening we'll have a press conference with the president. But if US joins in this, and this really swells up, we could be in deep trouble. So that is why I believe that it is extremely important to analyze the situation rather than thinking about India wakes, thinking about what is happening to the market, thinking about that okay, stocks have come down a lot, especially in mid and small caps, so let's go ahead and buy. This could really backfire. Normally I don't say like that. Normally I am very gung-ho about the markets when they fall this much uh, towards buying, but I don't see, and you'll be surprised to hear that, but I don't see panic in the market. Yes, I don't see a panic even by being 400 500 points down on the Nifty. This is, in my opinion, is not a bottom. First of all, we are down somewhere around 11 or 12% from the top. That is just normal for a market that has gone up 130%. from 7,500. Uh, and with the kind of geopolitical situation we are in, and I'm just talking about the Russia situation, which has escalated, we could be headed much lower from here. So we'll discuss about that. We'll discuss about a number of factors. There are about eight, nine other factors, seven, eight factors that I discussed 3, 4 days back with the members on YouTube and Patreon. If you want to be a member, you can become one. You would have absolutely benefited with that. Uh, and I'll discuss this now with all of you as well, because there is a lot more room for a correction in this market, and I'll let you know as to why I feel that way. All right, so let's get things started. This session will be more or less about the markets rather than specific stocks. There's no point talking about specific stocks unless the markets, uh, you can say, end their correction and stabilize. So basically speaking, why I took that move, and normally I don't take. Normally I am fully invested. Right now I am 70, 60, at least 60 to 65% in cash. And the reason for that are the following. So the Russia crisis 3, 4 days back was not that bad. So at that point of time, I think it was a Monday. So Monday morning. So by that time, yes, there was a chance that a war could take place, but nobody envisaged the thing that what Russia did today. Uh, but it didn't feel good at 17,200, 250, and there were a number of reasons for it. Number one reason for me to sell off, or to sell my positions during this phase, has been the Fed rate hike that is imminent. So I've written here on my mobile phone, so that's why I'm looking down. So the first reason for that was the 15th and 16th March rate hikes that was imminent. Now there are two aspects to it. Because of Russia tensions, there was a lot of talk that US might not hike the rates because there is a lot of tension in Russia, and we need to support the economy, and there could be higher oil prices, this and that. Now with the war happening, see what will happen is there might not be a rate hike, or there might be just a 25 basis point rate hike. Now you would think that would be positive. I feel that will be highly negative, because the Fed is already behind the curve. The Fed is already struggling to curb the inflation. The Fed is already struggling to curb the problems the middle class there in US are having. And I have contact there in US as well, I talk to, and the situation is bad. It is a 3 decade bad inflation, 3 decade high inflation there. Uh, you accumulate that with the war, and if US gets into this, then you would understand as to what I'm saying, that see, no market levels are sacrosanct unless a geopolitical situation stabilizes. The last war-like situation, as far as I can remember, it could be the 9/11 thing that happened in 2001, and there was a complete calamity in the market at that point of time. I don't think after that we have that sort of a situation. Yes, 2008 with the Mumbai attacks, we could say that at that point of time there was a lot of panic. I was not in the market at that point of time, so I really don't know about it. But see, it's been over a decade, 15 years, 14, 13, 14 years when you saw like this. This is not an odd event. Now, if this ends up with Crimea, if this ends up like Crimea, or if this ends up like a normal, you can say, war for that particular place, and no other country gets into it, then maybe this is the peak of it. But having said that, there are other issues, and that's why I'm pointing to those. So the number one issue that I feel is the inflation in US, which would end up, you can say, eating up here in India, because there is a problem of oil prices. Now oil has gone beyond $100 per barrel with this war that is happening, and this is a war that is taking place. This is not some attack or anything of that sort. We could be in a situation where the markets could be in a situation where anything is possible. So it's better to stay away. And with the oil being at $100 per barrel, $105 per barrel, and with the rate hike of oil taking place probably a month and a half back before the elections here in India, I won't be surprised if we are staring at 120 rupees, 125 rupees on per liter on the oil by the end of the month. I don't know how the government would react from 11th onward, but there would be rate hikes in oil prices, and that is what is concerning me. Inflation in US is concerning me, and that would end up culminating into a higher inflation here in India because of higher oil prices, and that inflation will eat up profits of most of the companies. That will eat up EPS of whatever estimates that everybody had. I had an estimates of 830 rupees 1 year forward. It should be cut down. So everything needs to be analyzed, and it would be analyzed over the next 2 weeks. That is why I believe that going forward, we could be in a situation where the markets may rebound tomorrow, may go to 17,000, may go to 16,800, 700. That doesn't mean that a bottom at 16,450 or whatever is found. We have a lot of issues coming up. So on 15th and 16th of March, we have rate thing. Now coming back to that point, if the Fed hikes by only 25 basis point because of this war and everything, we could be staring at further fall in the market because the Fed would have to increase rates even more going forward. If the Fed hikes by 75 basis point or more, then the market will fall because the hike is extremely large on one time basis, and there could be a situation that more hikes would await us. So in that regard, it is a double-edged sword that is staring in the face of us over the next 2 weeks. That's the first reason. The second is, of course, oil prices, as I mentioned here in India. If that escalates, everything will be expensive. Consumer stocks will be under a lot of pressure. You have a lot of consumer stocks trading at 80, 90, 100 times, 70 times. You'll have problems there as well. There'll be a total culmination of that. And if you believe IT and pharma could save you, then probably that is not going to save you either, because there are tensions in Europe, and if US gets into a war, then we could be in a situation where US and Europe's economy could be under threat. And in that sense, you will see the Dow Jones going down. Now, to talk about the Dow Jones, technically at around 33,000, below 34,000, it looks extremely weak. And once 32,200 goes away, which it has, so now we are looking at 29,800. And if the Dow goes to 29,800, that's a 15-16% correction. I think the Indian market is set to correct much further from here. So oil prices was one thing. Then there are smaller things that I want to talk to you about. New Sebi norms in terms of intraday trading and whatever margins you have to keep, that would come into effect from 1st of March, and there will be issue for that, although it has taken a back seat, but probably that is priced in at 16,000. So let's move on with it, because when I made this list, the market was at 17,300. We are at 16,400, 500 now. We are talking of scams. There is an NSC scam that is going on that has been revealed. Yes, it happened in 2016-17, but a lot of things are coming out. So NSC, which is the primary, you can say, index where people trade in, there are issues with that we know about. Now another major factor, two major factors that we have to be concerned about is the type of FII selling that we are seeing at the moment. And the second factor here is the elections of UP and the results. So when I talk about FII selling, during 2018 to 2020, before the pandemic, FII sold around 150,000 crores of you can say shares. Right now they have already sold 200,000 crores of shares already, and they are selling relentlessly. They have sold yesterday 4,300 crores or something. They might have sold even today. And if you go back during the time of the pandemic in March 2020, they sold something like 60,000 crores in a month. So you could stare at something of a figure not quite close to that, but somewhere in the region of 40 to 50,000 crore in a month. If this war, if this whatever is happening here in Russia escalates, and then oil prices surge, and the fact that Indian economy goes into stress because of higher oil prices and all, which will happen after 11th of March. So be ready for more FII selling. That's what I believe, and the markets to set lower. I think this selling will abate at a particular price when the FIIs would think that the markets are good enough for a move ahead, or the markets are good enough and they are cheap. Because at the moment, as I said, we are down around 10-11%, which is not huge. 20% is very easily possible even in a bull run. 25% is possible. So you can definitely calculate from 18,600 where we could be headed uh, from here. So FII exit, once a DII start exiting, who are buying 3,000 4,000 crores, then the massive selling and probably a bottom could be seen. So what will happen is, during the time of the bottom, if everybody wants that to know about, probably at that point of time, you could be seeing uh, 4,000 crores, 6,000 crores being sold by FIIs, and 4,000 to 6,000 crores being sold by DIIs, and everybody will throw in the towel, and that is where the bottom will be found. Go back into 2020, go back into 2016, go back into 2011, and you'll understand that when everyone was out of the market, everyone was negative, that was the time the market bounced back. At this point of time, as I understand, most of the people believe that if things at Kremlin subsides, market will edge higher. I don't think so. I think we have very big issues that are surrounding us. We have heavy FII selling surrounding us, which is backed by DIIs buying. So that's why the market is at 16,600. And I fear the fact that when DIIs do end up selling, or the retailers, we all retailers end up selling the way they we have held on to the market over the last 2 years, then the culmination could be bad. So that's another reason why I believe things could go haywire. And coming to the UP elections, and that's the last point I want to make here, UP elections is something that has taken a completely back seat. Now, I don't want to support or be against any government per se, but what I want to say here is that if the government that is in the ruling party in the, you can say, in India, they don't come to par the way they have last time around, or if they come to par with a little bit of majority, I think the market is not going to take that very easily, because this is a pro, you can say, market government, and has done extremely well from a corporate front, from a growth front here in India. Uh, I believe if things go up and down there, because it's like a semi-final for the 2024 elections, we could be staring at even more trouble. So over the next 2 3 weeks, by the 15th of March, my way of probably investing is that if the market collapses completely, then I will look at stocks. I'm not even looking at what to buy or what to do, or looking at the market per se. So coming to the levels, and everybody wants that to know what I feel that the market should correct 20% from the top, and that is 15,000 to 14,500. Between those levels, I think the value will emerge around 15,000 to 14,500. But really, it is a foolhardy thing to do at the moment to understand about any levels. One has to just take a back seat. If you are invested from a 3 4 year point of view, don't worry, stay invested. Things will come back over a period of time. If you are a trader and you are not in huge losses, you are losing 10 to 15%, you can still be out, have cash and buy later. And if you are in cash, probably stay in cash and just stay put. Let things settle down on the ground. Don't look at market levels, even if that means that when everything settles down, market is back to 17,200, we'll buy at 17,200. We will leave this rally of say 1,000 points or 1,500 points, whatever happens. Because if you buy anything at this point of time, and if things get worse in Russia, if things get bad with inflation, if things get bad with elections or other things, we could be, or you could be losing 30 to 40% of your capital. So it is about protecting capital rather than making money at the moment, and time to make money would also come in. So hopefully patron members would have been benefited with this, or members on YouTube, etc., with whatever I did and shared with all of you. All right, so I'm ready to answer your queries. Kindly use the super chat, super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. All right, so latent view 500 average price. Wait for 15,700, 15,500 to average and have a 2 3 year view. Those who have bought for trading on any stock, it's better to just stay put. If you have not sold, I have two positions in my portfolio which are down around 30% each, and I'm not doing anything. There's nothing one can do. So I can tell that firmly here. For queries for stocks which are down 20 to 30%, that at this point of time, with this kind of a situation that we don't see in decades, it's better to just stay put, and whatever money you have, just keep the money with you. See, Reliance, I feel, could be headed towards 2100 in the short term. There could be more pain there, around 8 to 10%, and that's why I see the market going further down. And then from there on in, I think in a year's time, it should be closer to the new highs. It should be closer to 2700. So, what I feel about the market and the stocks and everything is that over the next 3 to 4 months, things will go away, and over the next 1 year we will see a decent rally in the market. But whatever I told at the moment is for short term investors, for those who want to do positional trading, that this is not the time to jump in and think about making money. This is the time to save capital. For those who want to invest also, they need to wait it out. 16,000 to 15,000 could be good levels to get in and have a 3 4 year view. So that's my point. Uh, Amol, I don't think that could be possible. I think whatever has happened at the moment in Russia, that is also an extreme that is taking place. uh, I, this sort of a thing can only take place over a period of time. It won't happen suddenly. So what will happen is that if America gets in, their allies get in, and there is a lot of, you can say, stiff competition that goes on in some parts of Europe. Russia try to annex more of its own, you can say, more of its previous states, you call it, which were broken from it during 91 92 when it was USSR. Then there could be trouble, but at this point of time we cannot think of that at the moment. Yes. Yes, and see, Indian companies, most of the IT companies, some of the pharma companies, some of the chemical companies, they have a lot of exposure to Russia and Europe, and they will be affected. So I have not made a list of it. UPL has some exposure, Mastec has a lot of exposure, large IT companies have. I don't have the list with me. I know about some of the companies, so I'm saying. But yes, it would be affected, and that's why I say that Indian markets are not immune. They will fall, and they are not like any other market in some other universe. If US will fall to 29,000, the Dow Jones, India will fall and Nifty will fall. Sajjan, thanks for your contribution. Will Nika and Loris and recover 12 months from now? I think they will. I think they will. Uh, See, the thing is here is, where will this end? That is the point. Recovery will take place, but where will this end? Will this end at 15,000? Will this end at 14,000? Will this end at 11,000? Has it ended today? Is there no issues going forward? We don't know that. And uncertainty is something that the markets do not like. So, Sachin, what I can say is that you can slowly accumulate these stocks from a 2 year point of view. Don't think 1 year, from a 2 year point of view. If you have them, hold them. I think by end of December, my feeling is that the markets would be higher and things would normalize, but we don't know. So for example, if this thing of election goes, you can say, against the market, whatever the market is thinking, then we could be doomed for 1.5 years, because then people will think, suppose Aam Aadmi Party wins in, say, in Punjab, or the main government here, or the BJP, I can say it clearly, or the BJP loses in UP, Aam Aadmi Party wins in Punjab. There could be another factor coming in, that Aam Aadmi Party could win elections in states, and that's another factor that could set in for 2024. So there are a lot of things that are going around. It's better to wait it out and then take a position. Santosh, thanks for your contribution. Sitting 117% on 17% loss. What to do? I have a 2 3 year time frame. Which stock are you talking about, Santosh? Or 17% loss on the portfolio? Are you talking about that? So kindly mention that, and I'll definitely answer. All right. So if it is a 17% loss on the portfolio, then do not worry. In 3 years' time, you will make money. Probably have some money on the side and buy between 15,000 and 14,000. That could be one thing that could be done. Don't do anything at the moment. If you have good quality stocks, hold on to those. So that's the call. So basically, what I meant here is that the problem is not whether the recovery will come in or not. Recovery will come in, but where will this end? That is the question. Because people think that, okay, there was a lot of talk about this thing, whatever is happening in Europe, and now that has happened. So a bottom is there. That is not the case. There are at least 7 8 other factors that is revolving around this market and hanging like a sword. We need to be careful this time around. I'm not saying this could not be the bottom, it could be, but we need to be slightly careful, because this thing could really escalate very quickly. The way we have seen 300-point gap down, and the market not even don't even think about covering, not even going close to it, whatever the gap down level was. So it's kind of difficult. I'm talking of SGX. SGX was around 16,700, 750. Then it went further lower. Has the market gone to 16,750 yet? I don't know. I have not checked the markets. Let me check it. But things are not that great. We are at 16,500 in fact. So things are very difficult, and it could get worse from here. So be in cash. Thanks a lot for your contribution. Please tell me 5 stocks to buy, as I have some amount around 40L. Kindly to email me. I don't recommend stocks like individually, but we can have a discussion on call. Second thing is that it's better to be in cash for a while, rather than thinking of buying anything at the moment. But you can email me, and we'll think about it. All right. What is your percentage gain loss in portfolio? At the moment, I'm down 25%. I can tell you very frankly, I think 25 to 30%. It's not good. I have only 2 stocks in my portfolio, and I'm down something like 30 35% on my portfolio. So I've not checked today because I knew I would be down big time. So I'm down 30 35%, and others I have sold luckily at no profit, no loss. Though not heavy losses, so I exited. I can tell you very frankly, I'm 35% investor, something like that. 35 40% investor, 60% in cash. So that's how it is. And those stocks, I don't think the levels would come back anytime soon. I think 6 to 8 months are gone completely with the way the markets are. It's just that it's down so much that you cannot sell, and you would agree with that. So not doing anything, because they are decent companies, decent quality companies, so won't be exiting. See, everything will fall. So don't expect that mid cap IT is something. So IT is an export, so it won't fall, or something of that sort will happen. I can tell you one thing, that all these export oriented companies are in greater trouble with exposure to Europe and US, because if anything happens, if US gets into this, then we are in deep trouble, and that is my biggest concern now with respect to whatever is happening. But there is, you can say, byproduct of all this, and that is higher oil prices. We have already crossed 100. We could be staring at $110 per barrel if this continues for a week, 10 days. And from 10th, 11th March onwards, the government will have to increase rates, and sorry, the oil marketing companies will have to increase rates, and that would happen. And at that point of time, we could be staring at 120, 130 rupees a liter oil. So I don't know. We are in for very tough March. That's what I feel. I remember one of the anchors saying on one of the television channels, and I'm not against any channels, I won't name it, but saying that February has been bad, so March cannot be that bad. But I think March would be worse. Things are not looking great. March series, that's what I'm talking about. Tomorrow would be the beginning of it. I think the series might begin in green for all you know it. If we close at 16,200, we might see a 200 point rally, 300 point rally. But so if you ask me when I will turn my stance and say that, okay, let's buy, things are fine, that would be from 17,000 levels. If 17,000 comes back, if we are above the 200 DMA, we close above it very nicely, and many of these things have subsided. Yes, it's a buy, and we could see a very decent rally. I don't see 17,000 coming that quickly in the market. Even if that comes, there'll be a lot of selling, because there are a lot of issues India centric that is going to trouble the market. All right, guys. Thank you. Thanks a lot for being online, and we'll be online again on a Sunday. Please do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly do subscribe to my channel. Thank you.